Hi, everybody. Welcome to the next episode of KapVista Klips. Today, we have Andrew Gluck with us, who is a VC based out of New York, and we want to chat with him about his story, what he looks for in companies, and tell us about his fund. So welcome, Andrew. How are you?
I'm doing well. Thank you so much for having me.
That's awesome. Awesome. So, let's get started. Leila, do you want to kick it off?
Yes, Andrew, nice to meet you. Good afternoon for you.
Evening, 7 p.m.
Evening.
Yeah.
Yeah, so if you can, we don't know each other yet, so if you can just give me a little bit about your background, how you got into venture capital, and then we go from there.
Yeah, of course. So my background, I like to say, is really heavy in digital marketing. Easiest way to explain it, I spent about a decade in this space. So I first, coming straight out of school, worked at a B2B startup called Smart Sign. They were like the Amazon of street signs. They sold stop signs, street signs to municipalities, apartment building owners, all some novelty, but mostly really like B2B SMBs that they were selling to. Then I worked at Quidsi, which was an Amazon subsidiary. So they were the owners and operators of diapers.com, of soap.com, of wag.com, really one of the first, kind of maybe like a web 2.0 startup, really focused on, LTV, maximizing lifetime value of customers, really trying to get them to order on subscription, really trying to get them to cross shop between different categories. And that was a great, really interesting experience. Then I worked at the Vitamin Shop, which is a publicly traded company at the time. That there I was managing, again, digital customer acquisition, so acquiring new customers for the business. I really focused on the $100 million e-commerce business, and then they also had 900 stores nationwide, so doing about $1 billion a year in annual revenue. Left that in 2014 and co-founded an agency called Agency Within. The agency is now just called Within. They dropped the agency, and I guess they spoke to Sean Parker from Napster, dropped the agency. And grew the agency with co-founder to be one of, if not the largest independent digital marketing agency in the US. Worked with a lot of venture capital backed brands, so brands like Goop, Rothy's, Helix, Bandier, Zola, Lola, Drink Coffee, Petflow, Twillery, bunch of others. And then also enterprise brands like Nike, Intuit, Shake Shack, Spanx, Etsy. So really, worked with startups, worked with more established brands. But again, really focused on customer acquisition, retention also, but across the digital channels, started getting to non-digital channels as well, but across Facebook, Google, Instagram, direct mail, podcast, OTT, and did that for a few years. Grew the agency really successfully. I had an exit from the agency in 2018, and then after that, I was trying to figure out what I wanted to do next. And one of the things I really loved about the agency was working with these early stage teams, working on that kind of 0 to 1, pre-product market fit, pre-really, scaling, but getting, working with founding teams at the earliest stages. So I started doing some work there, some consulting, some advising, some investing as an angel investor, and did that for about two and a half years. It was really great. Realized that this is a space I want to be in for the next 20, 30 years of my life, and decided to go ahead and make the switch over to a VC and raise a fund.
Awesome. That's an interesting story. So you've seen both sides of the landscape, and now you're looking to work with early stage companies. So what do you think you bring to the investment VC space, and what makes you different? Why do you think you're bringing something different to the space?
Yeah, no, great question. I think at the end of the day, one of the things that I really lean into is trying to be the best version of myself, right? And for me, that's really focusing on a few niches. So as an investor, I'm really focused on kind of 3 core areas: on direct consumer companies, just with my background and experience in that space, and having worked with a lot of fast-growing D2C companies, ad tech. So if you have a better, faster, cheaper way to advertise, to optimize those ads, I want to hear about it. And then next-gen commerce. So people are changing the way we shop online, whether that's through marketplaces, vertical SaaS, some consumer fintech, lending businesses tied to e-commerce and things like that. And yeah, those are kind of the core areas that I focus on. I think in terms of, what I bring to the table, obviously my digital marketing background and experience is something that not a lot of other investors have. And so that's one of my biggest value adds to companies, and also one of my biggest lenses and perspectives for filtering and looking at these companies. And then I'd say finally one thing, that I pride myself on is just being really conviction driven and really not looking to follow on to rounds. I mean, I will follow on, but not really caring, for lack of a better word, who the lead investor is, or if someone's leading that doesn't really impact my decision-making process. Listen, like having a great lead who has a specific focus in a certain area, and or, great lead who I know is gonna, continue to fund the business in theory. If they're, if there's a bridge round and things like that, sure, those things are helpful. But I think, the classic trope that every VC seems to agree on is, in order to make money in this business, you need to not just be right, but you need to be contrarian. So, really try to be early and contrarian and really try to get in before there's that, buzz about a company or the company is really hot, really try to get in before the inflection point, if you will.
Yeah. Yeah. Awesome.
So let's say that you already said the sectors I invest in. What would you say you would look for in a founder?
Yeah, no, great question. Another area that I really focus on is what I call founder market fit, which means, awesome. Let's say we the market looks really great, and then the business and unit economics make sense, and all those and those things are building blocks are there. The next question for me is, is this the right founder to build this business? Because truthfully, like, aside from a very rare instances, there's a few people that are coming out with the same ideas and tweaks about different approaches and how to go to market and branding and style and pricing and all these things. But there's usually a bunch of different people attacking different markets. And so is this person's group of people the right people to go and build in this space? And so I over-index on what I call founder market fit again, which means, has this person spent time in this industry? I love it when a founder spent 4 or 5, 7 years in an industry, sees what's wrong about the industry, and then goes and creates a better version that he or she would have used as a buyer or as a user in that space, that they go and create that solution that they wanted had they existed. I saw that noticeably with Lunchbox, where the founder, Nabil, was a busboy and then rose the ranks to be CMO in the restaurant industry, with Jordan Nathan, the founder of Caraway, which is a kitchenware brand, and where he has a ton of experience being the GM of a kitchenware brand that went public. And so kind of just being able to spend all that time, see what's right, what's wrong, and then go ahead and have that unique perspective, that earned and learned perspective from spending time in the industry. There's time and place for the outsider coming into the industry and making wholesale changes and bringing that wildly different perspective, for sure. The name of my firm is Irrvrnt, which means not doing things the way we've always done it. One of the reasons we were so successful on the agency side is because we didn't have agency background and experience. But so the outsider perspective is important, but I think it's how that outsider perspective comes to be, right? So, it's kind of, if you can.
Any personality trait that you look for? Because I've seen some investors saying that they just invest in people that have extremely high energy and very passionate. And would you say that this is extremely important or not necessarily?
Again, I'm going to go back to you have to be the best version of yourself. At the same time, the founder and CEO has to do sales all day, every day, 3 different types of sales. They have to sell investors to keep giving them money, to keep raising, to keep growing the business. They have to sell employees. Hey, go leave your stable job, go leave this other option, at one of the things, where you can make a couple $100,000 a year to come take a crazy ride on this, roller coaster that is early stage startups, and then they have to sell to customers, whether it's B2B or even if it's, consumer focused, where you're selling at the end of the day, you have to be able to do that. And different people have good different sales tactics. I don't think I'm the highest energy person ever, but I'm really passionate about what I do, and really try to be really thoughtful about what I do, and love explaining venture, the asset class, investing, startups, all of that stuff to people. Like in a really inordinate amount of my LPs in the fund are first-time investors in venture, and a lot of times it's like a lot of the conversation will be like, Andrew, we know you, we believe in you, we trust you, like we want to invest in you, but we also, can you explain like how this whole thing works to us? And I love those conversations. I literally had one of those conversations earlier today. So you need to lean into the best, kind of version of yourself. And so for some founders, that is that rah, peppy, really high energy. For others, it's more laid back and thoughtful. And I think, it also depends, where you are in the journey, right? At the early stages, you have to be the cheerleader. There might not be metrics, product to rely on. At later stages, it might be a little bit more, hey, like this is what we've accomplished. Like take a look at what the business has done, at the product, at the customers, at our current employees, and where we've kind of snagged people from. These are our investors and the people that believe in us. And like this is our vision for the future, and we'd love to have you come and be a part of that. Whether that's pitching to customers or pitching to potential investors or to potential employees.
So you've mentioned, what you look for in a founder, but what other indicators do you look at before making investments?
Yeah, I think one big thing obviously is market size. So one of the beauties of venture is asymmetric upside, right? When you make an investment in venture, the most money you can lose is the investment. So as an angel investor, or as a venture fund investment, you can only go to zero, right? Barring some crazy outcomes where you're held liable for things. And the upside is uncapped, right? So I think really early on, while I was learning about the industry, this is one of the hardest concepts to really understand. Is that are there funds that go and look for singles, doubles, and try to build, invest in more quote unquote sustainable businesses? Sure, there are, and sometimes they find them, sometimes they don't, and that's a different type of investing, in my opinion, than really true like venture investing. Venture investing is, or at least early stage venture investing. When you're later stage growth investing and putting in $100 million, $200 million checks into companies, it's a little bit different. 3-5x's can make you a lot of money. When you're in the earliest stages, where there's so much risk, you need to have that upside and uncapped reward potential in order to offset all the losses, right? So, most funds, 20 investments, 10, 0, 1x, you have 5 or 6 that make 2, 3, 4, 5x, and then the last 3 to 4 are where all the returns are. And even within that, almost all the returns are concentrated in the top 1 or 2 investments. And so, that's the business that we're in is can you find businesses that can grow into these massive companies? And you need the market to be there, or have faith that the business can actually create the market. And so can the business, Uber being the classic case, I think Airbnb is another great-ish kind of example, right? Couchsurfing existed, the market for it wasn't nearly what it was. Professional, and now what Airbnb has become with, owning homes and renting them out as an asset class, they kind of created a lot of that market. It existed, but they really built it into the BMO that it is today.
Yeah.
What if the market size is too big? Would you say that is realistic, or would you look at it and say this founder doesn't know what he's talking about?
Oh, well, there's never a market that I'd be upset if it was too big to go after, but I hear what you're saying in terms of just the way that it gets presented. Yeah, I think sometimes people will present, tab slides where they just talk about total addressable market is X, Y, Z. a few things that I see done wrong when done that way. One is like, well, if you're a payments company and there's trillions of dollars spent on this, well, yeah, sure, but your revenue is going to be 2, 3, 4% of that, right? So represent the TAM as a revenue, not as a market size potential. Yeah. And then, really at all stages, would love seeing kind of like a top down, like we took this much and this and whatever, but also bottoms up analysis, right? Oh, we're selling into these kind of these are 3 categories of users. This is how many exist on at the lowest tier, at the medium tier, and at the highest tier, SMB or prosumer, SMB, and enterprise. And this is the price point that we charge for each of these. And here's our bottoms up TAM analysis. And now I'd be like, okay, well, maybe I don't agree with how many, prosumers are. Maybe I think actually your enterprise, yeah, that's what you're currently charging, but you should be able to charge 20% more as the product expands and you add, more features. There's actually upside. So
it just depends how they present it, basically.
Exactly.
Yes. You're a marketing guy, just like me. I come from a digital marketing background as well, so you probably love data.
Love data. Yeah.
What would you say that are the key trends that you have been seeing in the market, in the sectors that you invest or not?
Yeah, I think one in the D2C space, obviously, or maybe not obviously, but is people really want to see anti-fragility. And so want to see businesses that are less and less reliant on Facebook and Google, to a lesser extent, but really Facebook for customer acquisition. So do you have a distribution method, a methodology that's kind of better or different than that, right? So do you have, if 30% of your customers are coming from Facebook, but 20% from Google, a good amount from word of mouth and community and referral and organic, like that's great. Investors don't want to see, hey, we have 80% of our new customers coming from Facebook, because Facebook CPMs have only gone basically in one direction over the last 8 years, and it's been up and up a lot. And the data and the performance of that has only gone down generally. Yes, it's gotten better in some of the targeting and the performance, but at the same time, especially recently with iOS 14, iOS 15, cookie apocalypse, and all of that, it's becoming harder and harder to be reliant on performance marketing as the main channel for customer acquisition.
Yeah. Okay. So just before we get into this, the fund, just one thing to ask: are you a financial investor or a strategic investor? Do you look to help what we call smart money? If you get the company on board, are you looking to just invest and hope for the best, or are you looking to help advise and strategize with them?
Yeah, hope to be smart money. I guess TBD. I'll let my founders decide on that. But yeah, for the fund, have already 2 investments lined up, and both of those are in areas where I have some expertise, and hope to lend some of that to the companies that I'm investing in. Pretty actively involved. For both of them, have bi-weekly meetings set up, so basically every other week, just getting together with them. Both of them are still pretty early, but as they build out Slack channels or have weekly meetings, tend to kind of join those things and just provide my perspective, and see if I can help. I think there's a fear of just you don't want to be a negative and a drag, and don't want to be dumb money and pull things down, but at the same time, you really need to, there are things that I know and have done that I can shortcut them from A to Z. And one of my favorite quotes, and I think haven't found who it's attributed to yet, so if anyone knows, feel free to let me know. But it's like the stupid man doesn't learn, the smart man learn. The stupid person doesn't learn from mistakes. the smart man learns from mistakes and the wise man learns from someone else's mistakes. So I've made plenty of mistakes in business and in life, and I'm happy to have those be learning examples and get use out of them for other people. And so that's kind of what I try to bring is, listen, I'm not the most experienced. I'm still in the early stages of my career, I guess. I'm 33 years old, been working for about 10, 12 years now in the professional world, but have co-founded a company, have exited from a company, have grown from 0 to 100 employees, have spent over $1 billion on Google, over $1 billion on Facebook and Instagram. And so if I can shortcut, some learnings and some wins for some of these early stage companies, like I'm all about that.
Awesome.
Any mistake that you can think of now that you say, I would never do this again?
Any mistakes?
Yeah, any mistake that you can highlight that you've done in the past and now.
Putting me on the spot.
It's like a job interview, isn't it?
yeah, that's a tough one.
Sorry.
No. Let me think about that. And let's come back to that one. Let me see if I can think of a fun one.
You have a couple minutes to think.
Yeah. All right, so let's chat about the fund. What's the current size of your fund?
Yeah, so it's a little interesting because it's actually through a rolling fund structure. So AngelList has created, in my mind, like a really, really awesome product. And they've just announced recently some more awesome products for investors and for founders to make, really productizing early stage startup creation. And now they've productized kind of that early stage fund formation. And so the way a rolling fund works is that technically every single quarter is its own fund, meaning my first quarter kicked off on October 1st. So my first quarter will be October 1st through the end of December. But at the same time, any LP that joins gets to be cross-collateralized across all of the quarters, all of the funds that they're in. So, most of my LPs are joining I have a minimum of 4 quarters, but a lot of them are joining and committing to 8 quarters up front and looking at that like one fund across all 8 quarters. So right now, fund size is about around $750K a quarter or so. Should be there, maybe get close to $1 million by the end of the quarter per quarter. So the way I kind of describe it, which is a little complicated, it's like a $7 million-ish, $5.5, $6.5, $7 million fund. Should probably grow to about that over the 2-year lifespan.
Okay, awesome. And so obviously it's a rolling fund. You're raising funds now. What is your ideal LP? What are you looking for in an LP?
Anyone with money that wants to give it to me. Just kidding. I really like LPs who are interested in venture and just in the asset class and looking to learn, or have experience and looking to help, or a combination of the two, right? So I have some LPs who are more experienced than me, or who have been mentors to me in this process and kind of have helped me grow over the last few years, and want to continue to see me grow and have supported me, and them having the confidence in me to let them manage their money is a huge sign to me of their confidence in me, and I really appreciate that. Then I have a lot of LPs that don't have exposure to the asset class in any other way. A lot of my LPs come from my network, high net worth individuals who have, I'd say, traditionally been invested in real estate, in public equities markets, things like that, where that's where their experience is from and where they've had success. And I regardless of if they invest in me, I tell prospective LPs this all the time that don't have exposure to the asset class. Like, I'm a strong believer in the asset class. So even if you don't invest in me, please continue going and talking to emerging managers. Please continue talking to early stage funds. I think not having 5 to 10% of your investable net worth in kind of these asset classes is a mistake, just because of, again, the tremendous upside. Any one investment, sure, there's a chance of zero in any one investment and even a portfolio, but with portfolio theory, if you're investing in a fund, it's really hard to not get some, some return of capital. And so as risky, quote unquote, as the asset class is, it's not that risky when you make either direct investments as yourself as an angel and make enough to have that portfolio theory kick in, or invest through a fund. So I'm happy with LPs who are looking for the exposure. I'm happy with LPs who are going to be value add. I love LPs that want to get actively involved. There's always different parts of a business where I might not be an expert. I have an LP who's a founder of a business that I don't know the space very well, but is a small part of another business that I'm looking at and diligencing. So my ability to say, hey, to the founders, hey, can you talk to my LP? And I'm going to listen into this, phone call for half an hour, and that's going to be part of my diligence. Like, this person is, that LP is just awesome. I have a lot of LPs that are sending me deal flow, which is great and really exciting. I have LPs that want to invest in the fund and then also are looking for additional deal flow and saying, hey, when you see stuff that's too late for you, like send that along. Or hey, when you invest in stuff, if there's other allocation around, like we want to see in addition to that, and be strategic about where we invest in these, certain key areas where we make direct investments. So every LP relationship is different, but it's fun and exciting. Maybe ask me in a few months after I have to give him some reports and memos and everything else. But it's fun and exciting, and I think that's one of the most novel things about the asset class is how cooperative it is. There's competition and sharp elbows for rounds, and there's some bad behavior, but overall it's generally like, because there's so much overlap between LPs and founders and funds, and there's it's an infinite game, and just in terms of you can't really game theory it, because you're just going to keep running into these same players, and everyone has a reputation is their most important thing at stake. Everyone generally is a pretty good actor, and there's also a really strong belief just from everyone in the industry that, like, listen, like, I'm not saying that there aren't, this is in finance and people are focused on making money and fiduciary responsibility to their LPs, but there's also belief in investing in businesses that are going to help people and help businesses and help drive technology forward, which is really exciting for a lot of people to be, technologists and be able to invest and help get things going, as opposed to just being, a passive consumer of that technology.
Awesome. That's really, really cool. So, part of our network, there's a lot of, traditional, what we call traditional investors, people who've spent their investing career looking at property or fixed asset classes or listed stock and things like that. But the last few years, there's been a big shift. People, investors are looking at the VC private equity space, the early stage startups, because there is that upside that you talk about, but also the fact that they can invest into things that they believe in. They can invest into the latest technologies. They can invest into companies that are changing the way we work, the way we drive, the way we live our life, and that's exciting for them. So finding an expert or someone that knows more than them in that space is valuable. So that's why we like to connect with fund managers like you and connect them with people in our network, because we feel that at the very least, they can have a really good conversation and they can learn something about it. So before we wrap things up, and if you have had time to think about Leila's question, but I just wanted to put it out there. What do you want, potential LPs and startups to know about you?
Great question. I think we've touched on it a little bit, but one is that I really do have this operating background, and I still am an operator at heart. And so I do like to get my hands dirty and be, you know, a really value add investor to founders. And it's one of my biggest pitches to founders in terms of winning allocation and access to deals and building a good reputation of deal flow coming in as well. You know, one thing I take a lot of pride in, which I actually was about to post a Twitter poll about this, because I'm curious, but is I respond to every cold inbound, meaning anyone who reaches out to me and submits a deck. I mean, sometimes it'll just be, hey, this isn't a fit, but, you know, I take a lot of pride in that. And I think, you know, for LPs, I think it's that I took a lot of time before coming to the conclusion that I wanted to raise a fund. Something I've been thinking about for a while, and I don't take it lightly. I have been thinking about it for, you know, the past year and a half, and it's only something that I felt comfortable doing once I thought that it would be a good investment for LPs, in terms of just you know, again, like my ability to fulfill, you know, my fiduciary duty to LPs and really seek out the best, you know, the best deals. And then for, you know, kind of for everyone, I think, you know, one area, and I still have a lot of work to do in this, but that I'm particularly proud of is of my, you know, 25 or so direct investments that I made as an angel investor, about half of them had diverse founding teams. I don't even know if I know where any of the founders that I've invested in went to college or can remember at this point. I'm very big on founder market fit. I'm very not big on pedigree. And so I think that there's a lot of opportunity, you know, for investors who are open to cold inbounds, who are open to founders who don't look like the quote unquote prototypical founder. Investing has only gotten worse over the past year and a half with COVID and with Zoom for underrepresented founders. And so I think that's terrible, but I also think it's an opportunity as someone who's open and excited about investing in underrepresented founders. Is an opportunity to be a leader in that space. And again, I have a ton of work to do in that space still. So you know, I'm excited about that.
Yeah. And now shooting it back to Leila and her question, do you have any tips or mistakes that you've seen made that you'd throw it out there to companies you're working with to avoid?
Yeah, and this is a more of a cultural one. It actually came up really recently with a founder where he was expressing to me he's a relatively new dad, and he was expressing to me some of the challenges of that, you know, for him and balancing work-life balance and everything else. And I, you know, have 3 kids with, you know, God willing, another one on the way. So, you know, been a dad for a little bit longer. My eldest is 5.5 years old. So had you know, young kids when I was the founder of a fast growing, you know, business and everything else. And so, you know, some of our conversation and the advice there was around just, you know, honestly just giving himself some grace and some space and realizing, hey, like transparently, it's like I never felt like I was both the best, you know, founder on the same day that I felt like I was the best, you know, father. It's very hard to get both of those in the same day, right? And so you need to take a step back and bring a little bit perspective, and maybe on a weekly basis, maybe on a monthly basis, take a look at, you know, at how you're doing on both. Because someone who, you know, for me was working, you know, 12-hour days often, but also, you know, would unplug a lot on the weekends. I observe Jewish Sabbath, so I'm completely offline for 25 hours on the Sabbath, spend a lot of time with family then. You know, Sundays I try not to do any calls or anything. I do get some work in, especially now, but you know, so trying to kind of balance both of those and understand, hey, like it's not a work-life balance isn't necessarily, you know, with the family is not necessarily a day-to-day, it's going to be in perfect balance, but on a week-to-week, month-to-month basis. And listen, like you're fundraising, that month might be a really difficult month. You know, maybe a month or two after everything's closed and things are looking good, you know, that's when you take a 2-week vacation and you really unplug. You know, so talking through some of that and just having that perspective, which, you know, what was helpful for him, and honestly was, you know, just about like, again, giving himself some grace on both sides of the equation. And we're all people, right, at the end of the day. And like, we're only going to do our best work when we're fulfilled in all areas of life. And we're building, you know, startups are, you know, the joke is it's not a marathon, it's a sprint. It's a marathon that you're sprinting the whole entire time, which is kind of true. But at the same time, like, you do need to make sure that you are healthy, that your family life is good, that the other things outside of work are doing well, and you have a strong, solid base for that too.
Awesome.
Yeah, funny or interesting maybe, but pretty impactful.
Yeah. Well, we'll wrap it up there. Thank you very much for jumping on with us. It's been great to chat to you. We'll put your details, you know, in the comments. If anybody wants to get in touch with Andrew, please let us know. Leila and myself would love to connect them to you. Again, thank you very much for jumping on, and it's been a pleasure.
Thank you so much for having me. This was great. This was really fun. I appreciate it, guys.
Thank you, Andrew, for your time.
Thank you.
Bye.
Emily now.